Ever wondered why companies issue stocks? It's a question that piques the curiosity of many, and the answer is not as complicated as you might think. Picture this: a small startup with big dreams. As it grows and expands, it needs more capital to fuel its ambitions. Where does it find this capital? You guessed it, from issuing stocks. Stocks represent ownership in a company, and when you buy a company's stock, you're essentially buying a piece of that company. But why would a company want to sell pieces of itself? Well, it's all about growth and expansion. By selling stocks, a company can raise the necessary funds to invest in new projects, repay debts, or even just to stay afloat in tough times. So buckle up as we dive into the fascinating world of stocks. Imagine a company fresh and full of potential, just starting its journey. Picture the founders, their minds brimming with ideas, their hearts filled with ambition. They've built something remarkable and it's gaining traction. The business begins to grow, and with that growth comes the need for more resources, more employees, more equipment, more space. All of these require capital, the lifeblood of any business. But where does that capital come from? The founders could dig into their own pockets, but there's a limit to how much they can afford. They could borrow, but loans come with interest and a hefty repayment schedule. They need a solution that not only provides funds, but also shares the risk. Here's where the concept of issuing stocks comes into play. By selling a piece of their company to the public, they can raise the required capital without saddling themselves with overwhelming debt. This is the birth of a publicly traded company. So our company has grown, and now it needs more money to expand. What does it do? Let's dive into a nutshell of stocks. Imagine a small startup that's thriving. Now it's time to level up. But the catch is, expanding requires capital. They need money for new equipment, more staff, R&D, or maybe acquisitions. This is where stocks come into play. By issuing stocks, the company sells parts of itself to raise capital. These shares give the buyer ownership stake. The company gets the needed money to grow, and shareholders participate in future profits. Sometimes stocks are issued to repay debts, relieving financial pressure. Other times it's for funding new projects. Issuing stocks then becomes a way of getting funds without extra debt. It's a strategic decision, leveraging public investment to drive growth and share risks and rewards. The issuance of stocks thus becomes a strategic move for the company, a decision that carves its path towards growth and success. Now let's take a peek at the current stock market situation. The scene today paints a picture of volatility and uncertainty. Recent events have seen a downturn in stock prices across the board. Major players like Tesla, Target, and Texas Roadhouse have all experienced this dip. But before you start panicking, let's take a step back. Markets, much like life, are cyclical. They have their ups and downs, their booms and busts. There's a rhythm to these things, a beat that pulses through the financial world, and right now we're in the midst of a downturn. However, a downturn is not necessarily a disaster. In fact, it can be a time of opportunity. Think of it like a clearance sale at your favorite store. Prices are lower, meaning your dollar goes further. You can pick up more shares for the same amount of cash. And when the market eventually recovers, as it inevitably does, those shares could be worth a lot more. But it's not just about buying low and selling high. Downturns can also be a time for companies to reassess and reinvent themselves. They may issue new stocks to raise capital, allowing them to weather the storm and emerge stronger on the other side. Let's not forget some of the world's most successful companies were born in times of economic uncertainty. They found opportunities in the midst of chaos and turned adversity into advantage. So while the current market situation may seem daunting, it's also ripe with potential. However, it's important to remember that investing in stocks is not without risk. There are no guarantees. Every investment decision should be based on your individual circumstances, your risk tolerance, and your financial goals. It's always wise to do your homework and consult with a financial advisor before making any major investment decisions. Remember, the market is a cycle, and downturns can create potential opportunities. The world of stocks is a fascinating one, isn't it? It's a dynamic landscape where the ebbs and flows of the market, the rise and fall of stocks are as predictable as they are unpredictable. It's a dance of numbers, a symphony of trends, a game of patience and knowledge. And yet amidst this seeming chaos, a pattern emerges, a cyclical nature that tells us after every downturn there's an upturn waiting to happen. This cycle offers opportunities for those who are well-informed and patient. It's a beacon of hope that keeps investors going, even in the darkest economic times. But let's not forget, this isn't financial advice. It's a conversation, a sharing of knowledge. Every investment decision should be based on your individual circumstances, guided by your personal financial goals and risk tolerance. Remember, every downturn has an upturn. Stay informed, stay patient, and the world of stocks can be a rewarding journey.